but I think the reason for that is this is like a classic situation where you wouldn't be surprised if Bitcoin would sell off, and we're seeing the opposite. We're seeing strong long-term flows. We're seeing it like poking at its all-time high. So I think the pump alert is on. That's right. Yeah, we have this secular trend that just overwhelms everything else, and I think that will continue for a while. I also think it is worth noting, this is a major series of macro shocks, and Bitcoin is virtually at its all-time high, right? Yeah. That was not the case in previous major macro shocks. This is really the first one where we've experienced that, and we all think, I forgot what the title is, Bitcoin going to the moon or Bitcoin rating.
Matt begins by drawing attention to a crucial fact that many market observers ignore: the enormity of institutional adoption in the cryptocurrency space. He notes that a significant number of conventional wealth managers have begun incorporating cryptocurrency exchange-traded funds into diversified portfolios as early as the first half of 2025. Matt claims that the influx itself is intriguing, but so is the ease with which Bitcoin exposure is becoming accepted in conventional asset allocations. He thinks that the crypto ETF market is about to enter an age of exponential development that could completely reshape global capital flows because of this quiet integration and the rapid approvals that are occurring throughout Europe and Asia. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
The demand is extraordinary. And by the way, it hasn't slowed down.
It hasn't slowed down, and I think it'll be bigger this year. I think we're going to end up with more flows this year than we did last year. Because we're getting these national account approvals, and because I said this before, people who buy Bitcoin the first time, that's not the last time they buy Bitcoin. So all the people who bought this ETF last year are going from 1% to 3% or 5% now, right? Because they've learned, they've seen what it's done in their portfolio. So I think the flows are just going to go up. Look, I think this trend is going to continue. I know a lot of people think we're at peak Bitcoin treasury. I think peak Bitcoin treasury company is still 3 to 6 months ahead from now. There are a lot of deals coming through the pipeline. For every one you see announced, there are 3 in my inbox talking about their pipe. So
there's going to be hundreds.
They're going to be hundreds. And eventually some of them will trade at discounts to their net asset value. And it'll be interesting to see what happens. But this is a trend that's going to continue. It's going to accelerate in the fall. Look, it's really important for crypto broadly to get our first positive piece of crypto legislation. I don't think we can overlook the degree to which that's important. I do think it's a catalyst for why I'm really optimistic for the second half of the year. And then, obviously, stablecoins are going to be everywhere. I think it's worth investors sort of closing their mind and imagining a world where every investor has a crypto wallet, or every person in America, or every person around the world has a crypto wallet. Because that's the world we're going to live in a couple years, as stablecoins go from 250 billion to 2.5 trillion to 10-20 trillion dollars, which is the direction they're on, and every major firm. And just think about what that world means. That means you're one click adjacent to DeFi. Yeah, exactly. JP Morgan, right? Everyone. Yeah. Hell freezes over. But here we are, inevitable. Everyone's going to be one click away from DeFi. They're going to be one click away from Bitcoin. Crypto is going to be completely normalized. People aren't even going to think about it. Single sign-on with a crypto wallet onto every major shopping and website is going to be how people interact with the internet. That's the world we're going to be in 2 to 3 years. And what does that mean for the value of these other assets? I think it's extraordinarily bullish for DeFi. I think it's quite bullish for Bitcoin. I think it's bullish for a number of other assets as well. I think it's a really big deal. That's right. Yeah, we have this secular trend that just overwhelms everything else, and I think that will continue for a while. I also think it is worth noting, this is a major series of macro shocks, and Bitcoin is virtually at its all-time high, right? Yeah. That was not the case in previous major macro shocks. This is really the first one where we've experienced that, and we all think, I forgot what the title is, Bitcoin going to the moon or Bitcoin rating.
It's pump alert, Bitcoin about to explode, sir.
Oh, sorry.
I was sleeping and my pump alert went off, so we thought we'd make it off. Never happened to me before.
But I think the reason for that is this is like a classic situation where you wouldn't be surprised if Bitcoin would sell off, and we're seeing the opposite. We're seeing strong long-term flows. We're seeing it like poking at its all-time high. So I think the pump alert is on. The historical precedent for the SEC is there must be a parallel large regulated futures market, right? There was a Bitcoin futures market, so we could get a spot Bitcoin ETF, an ETH futures market, so a spot ETH ETF. The Solana regulated futures market is nascent and small. So if we do get a Solana ETF, I don't think we go all the way down the spectrum, but I do think it opens the door to, relatively broad-based exposure, something more like what we see in Europe, where you can get the top 10 crypto assets in ETFs. Ultimately, I'm not sure people want to buy the 10th largest crypto asset in an ETF. It may be that Solana is sort of like the end of the tail. Maybe there's one or two more. But it does look, it looks promising. And based on the filings we're seeing, that's the indication that people are getting closer to approval. There's no guarantee, but it does look like we're going that way. And I think there'll be a bid. I think people will want Solana ETFs. I think index-based ETFs are going to be a bigger deal, but I think people will be excited about Solana ETFs. I think we'll see a bump there too.
According to Matt, there is an enormous institutional demand for stablecoins. He notes that when he and his team speak with large investors, they react to stablecoins with the same excitement as a toddler seeing candy. Matt isn't shocked that platforms like Circle and Tron are receiving so much attention. Because stablecoins serve as a familiar and simple entrance point for institutional funds, he thinks they are similar to a Trojan horse for cryptocurrencies. Matt believes that this is only the beginning of a far greater wave of institutional acceptance, since big financial firms like Morgan Stanley, Wells Fargo, and Stifel have begun to sell Bitcoin ETFs and crypto research to their clients. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Right. It's totally crazy. I tell this to Ethereum people all the time. Ethereum's a $300 billion startup 10 years into its growth. It's like the most successful startup launch of all time. And Ethereum people are all sad. No, you're doing just fine. Like 300 billion is a lot, right? Like you're doing just fine. You're only 10 years in. If you were a company, you'd be amazed. So we do get an exercise to these numbers.
In line when it comes to global movement associated with stablecoins. That's what they're going to talk about, right? That's what they're going to talk about.
100%. And they're charging 5 or 6x the fee that you're seeing on layer 2s. And they're holding those margins. Like it is actually a remarkable business story. Yep. Yeah, completely crazy. You're absolutely right. The IPO window is going to explode. The second corollary of that is venture capital is going to explode as well, because all of a sudden my PE comp is not 20, it's 100, right? So the valuation window jumps up. And then with these companies flush with cash are going to do significant M&A. And absolutely, you're going to see all these companies rush. I mean, it is going to be a gold rush for Wall Street. And I think the demand is really significant. For what it's worth, when we go and talk to institutional investors, the story about stablecoins is like, setting candy in front of them. I mean, they can't get enough of it. They all want to invest in it. So I'm not surprised at Circle. I'm not surprised at Tron, even though it makes us, remember we're living in a simulation. But I do think it's going to be, explosive. You're going to see, a dozen companies come to market pretty quick. Yeah. I think that's absolutely right. And I sort of always wondered how we would get to that future, what the path would be. But this is clearly the path, right? This is the giant leap that gets everyone into the ecosystem. And then all of those other things become infinitely easier once everyone has their crypto wallet integrated with their bank account and their browser, et cetera, which is where we're going to be, right? All of a sudden, all those things are just half a click away, as opposed to like, what is a wallet? What is this seed phrase?
Yeah, it's just going to be your wallet. That's the point, is we'll finally abstract away the crypto and the blockchain and the NFT and the blockchain and all of it. It's just going to work, and that's where you're going to...
It does take a while. It took us 3 years to get to $100 million in assets, and as Scott just showed, we almost did that last week. So, you keep pounding. We have an incredible team out there, and I think these flows will continue, right? I think these markets are just opening up. There really are trillions of dollars that are just starting to allocate, and I think it's going to be a strong second half of the year for us as well. It's beautiful to see. We've actually had a lot of wins on the national account level. We've had a number of big platforms that have opened up to us specifically over the last 3 or 4 months. I tweeted this a little while ago, but it felt like every week, like another $5 trillion of assets opened up to Bitcoin ETFs. And a lot of that was to us. So we're starting to see flows from those platforms, from the Morgan Stanleys, from the Wells Fargos, from the Stifels, from the others. And they like us because we provide research about Bitcoin, right? That's why they want a specialist provider in amongst the mix. For a while, it was just BlackRock and Fidelity, and now we're starting to make our way in there. So it's beautiful to see.
Matt discusses how cryptocurrency businesses and stablecoins are become Wall Street's treasure trove. According to him, some of these businesses remain extremely lucrative by charging 5 or 6 times the transaction costs that are found on Layer 2 networks while maintaining such high margins. He thinks that the market for initial public offerings of these businesses is going to blow up, and venture capital investments will also soar, since private companies that were once valued at 20 times their earnings would suddenly be valued at 100 times their earnings, which will drive up prices. Everyone will eventually have a cryptocurrency wallet that is effortlessly connected to their web browser and bank account, he argues. Wallets, seed words, and blockchain won't even cross people's minds. They will all function in the background, making cryptocurrency as user-friendly as conventional banking. Even while it took his team 3 years to reach $100 million in assets, he adds that the number of national account approvals is growing quickly. Major platforms like Morgan Stanley, Wells Fargo, and Stifel have begun to accept Bitcoin ETFs, including the products of his company, during the past 3 or 4 months. They favor his business since it provides more than just investing exposure. It also offers specialized Bitcoin analysis. Matt finds it amazing that Bitcoin ETFs reached $37 billion, 6 times the previous record, while the largest ETF launch in history received $6 billion in inflows in its first year. He comes to the conclusion that although direct government holdings may not be replaced by Bitcoin ETFs, ETFs are just more effective for many smaller entities. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.